All right, we are recording. Hi team, hi YouTube. So I'm making this video specifically for my team, to go over binary options trading through pocketoption.com. I'm really making this for my team, but if you're just on YouTube and you happen to, find my video, great, you'll learn something. Yeah, so I'm going to go over pocketoption.com today and how I learned how to trade and find my own strategy, through pocket option and through binary options in general. Now, I've been a trader in the foreign exchange market for 2.5 years now. For the first year, I struggled. We all have our struggles, right, as traders. So for the first year, I honestly, struggled. I was trading the traditional style of trading, which is through MetaTrader 4, holding trades for a couple hours, maybe overnight, like a couple days. I wasn't really a swing trader. But my main problem that I personally found with trading the traditional style way was that I did not know when to get out of a trade. Not that I didn't know when to get out of a trade, but I didn't want to get out of a trade. I'd be in the trade and I'd be in profit, and maybe I would be a little greedy, right? And I'd want to wait to get more profit. And then I look back at it and I'm super negative. And then I was like, no, the trade's going to turn back around. Let me stay in. And then you stay in and you're just like down 100 pips, down 200 pips. And you're like, oh my God. Yeah, and you still don't want to close the trade because you're down so much and you want the market to turn back around, but it's not giving you what you want, so the advice I have for you is just know when to get out of a trade, okay? Do not marry your trades, because if the trade is going the wrong way, just get out. Like, you don't want to ride the market all the way down and then blow your account or something, So that was my main problem I personally had, trading the traditional style. I didn't know when to get out of a trade. So what I found, I got introduced to binary options trading a year and a half ago, over a year ago. And I was like, oh, thank you. Like, this is it. I really love binary options trading. This is mainly how I trade now. I still do MetaTrader 4, here and there, but I mainly have my money, and this is how I trade MetaTrader. Through pocket option and through binary options. That's like my style. You guys as traders are going to find your own style of trading. Maybe you'll decide that you like swing trading. Swing trading is holding a trade for days long. So maybe you decide that you like that. Everyone's different. So today I'm going to go over binary options, what binary options means, and we're going to go over trading binary options through pocketoption.com. All right, let's go. So when you log on to Pocket Option, it's going to ask you to make an account. So the reason why I like training on Pocket Option is, number one, it's free. So it's free to have an account on Pocket Option, okay? All you need is a name and an email, and that's it. You can start learning. You can start, using your demo account to learn and trade, So make an account on Pocket Option. The second reason I like it is because you can draw up your chart on this whole thing. So Pocket Option is the website, but it's also the broker. Okay, so it is the broker, meaning you can put real money on this and you can trade real money, okay, when you're ready. So you first use your demo account, and then when you're ready to use real money, you'll put real money on this website, because Pocket Option is also a broker. Now, Pocket Option is not US based, okay? It's not US based. But me personally, I've had no trouble putting money into the account nor taking money out of the account, okay? I personally have not had trouble, and I don't know anyone that has had any trouble, but you just need to know that it is not a US based broker, all right? So we're gonna go over the website. Now, the website over here on the upper left side, you'll see all the currency pairs here. So if I clicked it, there's a little arrow button and it's gonna let me scroll down. So these are all the options that I have to trade. So these are all the pairs, all the currency pair options that I have on this website that I can trade. Right now, we're currently on AUD versus JPY. This means the Australian dollar versus the Japanese yen, okay? And what these numbers on the side right here are telling me is that it's the payout. So if I win a trade, this is going to be the payout they're giving. So right now it's 80%. Over here, these say 80%, right? But on this column, it says 66% payout, 63% payout, and so on. So basically, this means if you win the trade, you get this payout. Another reason why this website pocket option is pretty cool is that other than currency forex pairs, they have crypto currency pairs. They have crypto. They have commodities, stock, silver and gold, which I do love trading on this website, honestly, silver and gold, because this number never changes. So this payout for silver and gold is always 92%. Like, that's amazing. It's amazing, right? And we're gonna go over what that payout means. Now, on the Forex pairs, you're gonna see throughout the day, these numbers change. So right now, yes, it says the payout is 80%, but in an hour from now, this can be different. It can be more or it can be less, okay? So these percentage payouts change throughout the day. All right, so now let's talk about we're on AUD JPY. Let's talk about it. So when the chart is going up, that means that the first currency in the pair is stronger than the second currency. So when it's going up, that means AUD, the Australian dollar, was worth more than the Japanese yen. It's stronger than the Japanese yen. Now, when you see the chart going down, like right here, you see these 3 red candles. This means that the Australian dollar is weaker than the Japanese yen. Okay, let's do it again. When the chart is going up, that means the Australian dollar is stronger than the Japanese yen. So you always have to know which currency is first in the pair, okay? So now, with binary options, you go in for a trade based off of time, okay? So we're gonna talk about the right side of the screen. Over here, you have M1, which means minute 1. You can change the time you want to trade. So if you want to go in for a trade for 1 minute, okay, it's on 1 minute. If you want to go into a trade for 2 minutes, you can change it, 3 minutes, 5 minutes, and so on. Okay, so for the sake of the video, I'm going to stick with 1 minute. Right here is the amount of money that you're willing to risk on one trade. So you can change this to $1, $10, or $100, or $1,000, depending on how much you have in your account. Okay, so let's stick with $100 because I want to go over the math with you guys. So $100. I'm willing to risk $100 on one trade. That's what it's saying. Down here, the green and the red is telling me if I go in for a buy, the payout is 80%. If I go in for a sell, the payout is 80%. These two numbers are always going to be the same, okay? They always have to match. Whether you're going for a buy or a sell, it has to match. Now, the percentage payout, it might change an hour from now if we come back and look at it. It might be like 90%, or it could be 70%. But both of them are always going to be the same, right? So basically, 80% of $100 is $80. So if you win the trade, you win back 80%, which is $80 on top of the 100. All right, so let's do 2 examples. I'm going to start with just the green. Let's start with the green. Now this is just for example purposes. I just clicked the green. So green means buy. So when I click the green button, that put me into a buy trade, okay? So what that means is in 60 seconds, I would like the market to go up for a buy, okay? So right now, we have red candles. It's giving me another red candle. So this means I'm currently losing. If you see this green line right here, that's where I got into the trade. So in order to win, I want the candle to go above that green line in 60 seconds. If we go all the way right and see, like right now I'm currently winning. Okay, let's go over to our time expiration. I currently have over here all the way on the right, I currently have 15 seconds left on this trade. Okay, now I have 10 seconds left on this trade. Okay, let's see what happens. It's still kind of like playing around. It's going up and down. 2 seconds left. Let's see. All right, so it closed. This said profit 0. Okay, so down here at the bottom, it says the trade has been closed. Profit 0. All right, so it was kind of like flickering around, around where we got in. So with binary options, you have to be very fast, depending on the time that you're in for. So if you're in for 1 minute, you have to be very fast. You're in for 2 minutes, you have a little more leisure, but it's all about getting in at the right time, okay? So now let's just do the opposite for the opposite example, okay? So first we press the green button. Now let's just press the red button. Let's see what happens for an example, okay? So now we press the red button. By pressing the red, we're in for sell. So in 60 seconds, I would like the market to go down because we're in for a sell. Now this red line right here is where I got into the trade. I want these candles to go below the red line in 60 seconds, okay? Again, if I lose $100. If I win, I gain back a percentage on top of it, okay? So I gain back the 80%. Let's look at the time we have left. We have 32 seconds left. Right here, this number says $180. It's green. So that means that I'm currently winning, okay? Do you see the green right here that I'm circling? $180 is green. So that means I'm currently in profits and I'm winning. But 10 seconds left and anything could happen. Look, as you see, anything could happen in 10 seconds. 5 seconds left, the market went up. Oh man, we lost one again. That's okay. So the trades have been closed, profit 0. You see it at the bottom. It's going to tell you whether you won or you lost that trade. All right. So now these are just example purposes of buy and sell examples. Okay. So you can have the idea. Like I said in the beginning of the video, I personally like this way of trading because it takes me out of the trade, whether I win or whether I lose, I don't have to like sit there and think about, should I close the trade? Is the market going to turn around? Like, no, it's just going to take me out of the trade. And that's what I like, right? Now, of course, you're going to base your trades off of your chart. So what chart are you trading on? So we're going to go back over to the left side. So remember, we're on AUD versus JPY. The next tab over, it tells you what chart you're on, okay? So this says minute 1. This means I'm on a 1-minute chart. So this is why I want to stick with a 1-minute trade. Now, if you're on a 1-minute chart, you can also do like a 2-minute trade just to give yourself a little more lenience and a little more time. I found that works best too. So if you're in a 1-minute chart, you can definitely do a 1-minute or 2-minute trade. 3 minutes might be a little bit too long because then you're giving the market a little time. You're giving the market to turn around. So you don't want that. So if you're on a 1-minute chart, stick with 1 or 2-minute trades, okay? Now, this is where you do your time frame. So if I wanted to change it, I can put it to a 5-minute time frame, right? So what this means, I know there's a lot of probably beginners, super new beginners on this watching this video. So what this means is that every candlestick represents 5 minutes, right? Because now I'm on a 5-minute chart. So this current candle represents the next 5 minutes. If I were to go back to the 1-minute chart, that means that every single candle represents 1 minute. So this is the current 1 minute. This was the last minute. This was 2 minutes ago, and this was 3 minutes ago, and so on. Okay, so that's what candlesticks represent. Okay, so now let's talk about this third tab right here. These are the indicators. All right, so now let's go over some indicators. This is all matching up to my strategy that I have, that I teach, okay? So let's add some indicators. Now, before you add indicators, you should know your basic knowledge about trading, okay? You should know what kind of trend are you in? Are you in an uptrend or are you in a downtrend? If you're in an uptrend, you probably only want to look for buys. If you're in a downtrend, you only want to look for sells. Remember, as a trader, the trend is your friend. We should all know this slogan, okay? The trend is your friend. Stick with the trend, all right? So you should know your basic analysis of marking up a chart, okay? Trends, and then about support and resistance. Is the market hitting some support and resistance right now? Is it going to turn around? Basically, what support and resistance is like right here is a good example. So if I draw up on my chart a horizontal line, and I'll put it here for the example, okay? So I'm going to put the line right here. What this represents is this is resistance, 1, and this is resistance, 2. What that is telling you is that the market is not trying to go past this area or this number. So it hit it, and then it turned back around. What did it do? It hit it again, and then it turned back around. Okay, so if you know your basic chart analysis, oh, look, if we go over more to the left, there's some more to the left. You always have to look to the left to see what happened in the past. All right, so we had resistance here, we had resistance here. Look, there's resistance here and there's resistance here. This is a strong area of resistance. So once it breaks that resistance, yeah, it broke here. Yeah, and then, okay. So this is a strong area of resistance. So that was a good example. All right, so let me delete it. So now you need to know your basic analysis, chart analysis, and then you can start looking at the indicators. So you do not want to only depend on indicators, but let's add in some indicators. So we have a Bollinger Band, right? We're adding in the Bollinger Band, and this is how it looks when you first add it to your chart. We do not want it to look like this, okay? This looks crazy. So we do not want it to look like this. So we're going to change the settings, all right? So let's go over here. We have Bollinger Band, and then you see this little eye. The little eye just means that you can hide it. So if I click it, look, it hit it. If I click it again, it comes back. Hide, come back, okay? So that's what that means, the eye. But we're going to click the next button in the middle, which is a pencil looking thing. So if I click the pencil, it's going to lead me to settings. So these are the settings that I want to change. Okay, so we're going to change the period all the way up to 20. And we're going to change the deviation all the way up to 2. All right, and the style, very important, the style. So the style, I'm going to put the top with the color red. And then I'm going to make the line a little thicker so we can see it. The middle, I'm actually going to uncheck it because I don't want any distractions, especially for beginners. This is a beginner video. Once you get more advanced in trading, you'll learn there's a way to actually use the middle line. okay? I'll teach that I teach that in my classes, and I'll probably make another more advanced video later, okay? So you uncheck the middle. The bottom, we keep it checked, but we're gonna make the bottom blue. I'm gonna explain why. So the top is red, the bottom is blue, and then I'm making my line thicker because I want you guys to really see it, okay? And then the background, uncheck the background, all right? So there's no distractions now. Let's save it. So right now there are no distractions. This looks much better than when it first hits your screen, okay? So I like to explain the Bollinger Bands as being rubber bands. So when the candlesticks hit the top, which is a rubber band, right? So that's why I made the top red, because when the candles hit the top of the rubber band, it's going to bounce back. So if you think in your mind like a rubber band, so whatever pushes against the rubber band, it bounces back. So this would be will be telling you that the market is going to come back around for a sell. Okay, so that's why I made the top red, because it's letting me know that it's getting ready for a sell. Okay, the candlesticks are hitting the bottom of the blue line, the blue rubber band, right? And it's letting you know that it's getting ready for a buy. Okay, so also you need to know that just because it's at the top of the Bollinger Band does not mean every time it hits the top you have to sell. You know, this is a lot of manipulation, because the market knows, the brokers know that everyone likes to use Bollinger Bands. Like, this is one of the first indicators we learn in trading. Everyone loves Bollinger Bands. So what did it do here? It hit the top of the Bollinger Band, but it didn't turn around. It kept going up, 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 because the main part is they want to take our money. Like, that's the point of the broker. They want to collect as much losing trades as they can. You know, they want us to lose so they can collect our money. So it's hitting the top of the Bollinger Band, and a lot of people probably would have made the mistake of selling, and then they would have lost. Okay, so you can't use this as your only indication to go in for a sell. That is a big mistake. Okay, like I said before, you have to compare it with other chart analysis, which kind of trend are you in, etc. And then there's other indicators right now that we're going to go over. All right, so when it hits the top of the Bollinger Band, it's going to turn around for a sell. When it hits the bottom of the Bollinger Band, especially when it's far outside like this, that's clear indication that it has to come back inside of the Bollinger Band. Okay, the point of the Bollinger Band is that the candlesticks are supposed to stay inside. Whenever they're outside, look over here like this, it definitely has to come back around at some point. So this came outside the Bollinger Band. Maybe some people made the mistake right here of going in for a sell, and then they lost because it went farther up. But then if they got in here when it was far, far outside the Bollinger Band, they would have went for a sell and they would have won, okay, in 1 or 2 minutes. Okay, so that's the Bollinger Band. Now let's talk about another indicator. We're gonna go to the tab indicators again right here, click it, and then we're gonna go to moving average. You click the moving average, and then for the sake of training, I'm going to hide my Bollinger Band right now. So I'm going to click the little eye and hide it. So right now on my screen, all I have is this green looking indicator thing. Okay, but let's make it look better. So we're going to change the settings. So we're going to go to the little pencil again, pencil. All right, so we're going to go period, make the period 20. Oh, sorry, that wasn't 200. Yeah, make the period 200. Sorry, I was thinking about the Bollinger Band. Make the period 200 and keep the SMA there. Then the style, we're going to change this main line. The style is just going to be any color that you like, that you can see. So I'm going to make mine pink. So, because I like this color pink, it's like fuchsia. And then I'm going to make the line really thick so that I can see it and I can explain it to you guys. All right. And then save. Now, the point of the moving average in binary options and in any kind of style, traditional way of trading, anything. The point of the Bollinger Bands is that when the candlesticks are above the moving average, we're uptrending. So we're in an uptrend, a buyer's market. Okay, so when we're in an uptrend, we only want to look for buys. So this was buying for a while, it was uptrending. Now, when the candlesticks are below the moving average, it's the opposite. All right, so right here. When the candlesticks are below the moving average, you only want to look for sells. Okay, so this goes in any kind of style of trading. The moving average means it's the average of all the past candles. So the moving average right now, I have it on the setting 200, right? So what that means, what the 200 means, is the average of all the 200 past candles, and the 200 last candles that in the past. So that's very, very strong moving average. Okay, that's a very strong moving average. You'll find that there's a lot of traders, they use like the common moving average of like 5 and 9. But what that means is just the past average of the past 5 or 9 candles. So that's what the numbers mean. So those moving averages are not that strong, but the 200 is very strong. All right. So that's a simple one, but let's hide it for now. Now let's add on another one. Let's talk about another one. So we're going to click indicators again, and then let's talk about the RSI. So when you click the RSI, you see how it popped up at the bottom of my screen? So let's change the settings around a bit so it could be a little bit more clear, okay? So we're going to click the pencil, the little pencil again. When we click it, we're going to change this number 14 to just 4. All right, so period 4. And then we're going to go to style. Just like the Bollinger Band, whenever something is overbought, I like to make the color red because we know that when the market is overbought, then we're going to look for sells. So as traders, we kind of like see in our head that like red means sell and blue or green means buy. So when the market is overbought, I like to put red. When the market is oversold, I like to put blue. Okay, so blue, and then make it a little bit thicker so you can just see the line. And you see how it could change down here at the bottom. So the top is red and the bottom is blue. Then the main line, just make it any color that you like, any color that you can really see. So I'm going to stick with the fuchsia again. And then I'm going to make the line a little thicker so that I can really see it. Okay, that's really thick, but let me make it 3. All right, so we'll stick with 3. All right, and that's it. You keep these numbers at 70 and 30. And I'll explain what it all means and save. Now the RSI, I like to call a roller coaster. It goes up and it goes down, all right? So this is a good place to stop right here, okay? So this roller coaster, mine's this pink, right? It's going up and it's going down and it's going up and down. Right here in this instance, it was telling me it was really far down. So it was telling me that the market was oversold. And the market can't be oversold or overbought for, forever. Like eventually it has to turn back around. So the market was oversold and it was going to come back around. So right here, we got the turn. You see how it was down here for a while, but then it started to turn back around. And what happened up here? The market was red, right? The candles are red. And then we started getting green candles. So this is telling us that the market, yes, was oversold, but it was going to have to come back up for a buy eventually. And then what happened when my pink line hit the blue line, it came up for the buy. Okay, so then that's when you would have hurried up and clicked the buy button because you wanted to get in for this buy and you would have got profit because the market went up. Okay, now the opposite way, when my pink line goes too high, it's saying that the market is overbought and we want to wait for it to come back around. So again, the market can't be overbought forever. So eventually it has to come back down. So we started to get this little turn. And then the key point about this is you really want to wait for it to hit the red or the blue line. So right here, when it turned, I would have waited another minute. And then right here, when it hit this red line, you go in for the sell. Okay, so then you would have got in at this candle and you would have been in straight profit because the market just kept going down. You would have got in for 1 minute or 2 minutes, you would have been in profit. Okay, so let's add all these indicators together and see what it's telling us. So we just have the RSI up now. Let's unhide the Bollinger Band and the moving average. Okay, so when you add all of them together, this is how it looks. All right, so let's stick with over here. I'm going to mark up my chart just to show how all three of the indicators can line up together. So let's put a vertical line up. Make this thicker so you guys can see it. Yellow. Okay. So I have this yellow vertical line and I'm going to move it like right here. Okay. So in this instance right here, let's talk about all three. So the candlesticks were at the bottom of the Bollinger Band, right? It hit the bottom blue line of the Bollinger Band, which tells us that the market is oversold, right? And eventually is going to turn back around. The candlesticks are again above my pink moving average. So when the candlesticks are above the moving average, you only want to look for buys, right? Because we're in an uptrend. And now the RSI is helping us too. So the RSI is down here and it's helping us because, so you see my pink roller coaster? My pink roller coaster is really low and it's telling me that it's getting ready to come back up, right? It's getting ready to come back up for the buy. So right, I would have waited another minute and when my pink line hit this blue line, it would have gave me the go to get in for that buy. Okay, so I would have clicked the green button right here for the buy and I would have been in profit because if this is 1 minute trade, 1 or 2 minutes, the market was going up for like 4 minutes. Okay, so remember, you wait for the RSI to hit your line, whether it's the top or the bottom, and then you go in for the sell. Okay, don't just go in for the sell because you see that the line is, you know, overbought or oversold. You definitely need to wait for that turn and it to hit the red or the blue line. All right, so these are how all the indicators match up with each other. All right. Now, again, like I told you, you have to draw up support and resistance. You have to know what kind of trend you're in. But this is pretty much my main indicators that I teach on. Now, there are 2 other indicators that are a little more advanced that I do not really want to go over in this video right here. But this video is just a beginner's video, so at least you can get your account started and start into demo trade. All right, so this is one more example right here. Let me get another vertical line of all the indicators matching up, okay? So let's do it again. And I'm gonna bring my line over to right here. Okay, so right here, the candlesticks, again, they hit the bottom of the Bollinger Band. Okay, they're even outside of the Bollinger Band a little bit. That's telling us that the market is going to come back around up for a buy. the moving average, okay? The candlesticks are above the moving average, meaning that I only want to look for buys because it's an uptrend. And then again, the RSI is down here. So the RSI is telling us, look, the market is oversold, and I want to wait for the market to come back around up for the buy, because the market can't be oversold forever. So eventually it's going to have to come back up for the buy. And then what happened? I waited till it hit the blue line, and then boom, right here, what happened? You waited and you got in for the buy, and you were in straight profit. This went up for like 10 minutes. So if you would have got in for a 1 minute, 2 minute, 3 minute trade, whatever, you would have won this one for the buy. Okay. So I'm just going to do one example of the indicators aren't really lining up right now for anything, but I just want to do one more quick example of pressing one of the buttons so that you can understand again what binary options is. So let's press the red. All right, so I pressed the red button. So again, we're still on a 1 minute chart. So this 1 minute chart, 1 minute trade, M1 right here. Again, we risked $100 on this one specific trade. Okay, $100. This, I just pressed eeny, meeny, miny, mo, okay? I just pressed the red. None of the indicators or anything was lining up for this example. So the green button again, 80%, the red button again, 80%. If I lose the $100 I put down. If I win, I gain back 80%, which is $80 in this case. Now, again, over here on the right side is the time frame, okay? So it's telling me right here that I have 20 seconds left in the trade. The middle number right here, it says 0 because, remember, we went in for the sell. So it's going up, so that means I'm losing because you see where the red line is right here? I wanted the market to be below that. Okay, so now 0 seconds, the trade closed. So again, you'll see it at the bottom pop up. The trades have been closed, profit 0. Okay, so this is why you cannot just jump in and guess, you know, buy, sell, do not guess. You want all your indicators and everything to line up for multiple confirmations before you go in for a trade. Okay, and then you always want to risk 5% of your account or less. 5% of your account or less. I know a lot of people think, you know, oh, binary options is so easy because it's so fast, you know, and they think that they can make money like, you know, fast and easy this way. But a lot of people blow their accounts that way. You know, you can't put half of your account or your whole account on one trade and expect to get rich quick, okay? You have to also compound your money just like you normally would with traditional trading through like MetaTrader 4, all right? So this was my little tutorial of binary options, trading through pocket options, okay? I hope this was very helpful. Please, if you're watching this on YouTube, like, subscribe. Also, if you want more information, you can definitely, you know, hit me up for more information. You can become part of the team. You know, if the team is watching this video, reach out to me. You all have my number and my personal information. Again, I hope this video was valuable, and I will be making another one soon, you know, a little bit more advanced. So I'll talk to you all later. All right, bye.